Hey traders, it's the 24th of July and it's just coming up 20 past 12 here in the UK. We've given you a couple of insights into potential trading opportunities on GBP across multiple pairs. You can see the head and shoulders or inverted head and shoulders we looked at trading earlier in the week has triggered and it's moving extremely nicely. But now moving forward, how can you look at any other potential GBP pairs and what can you look at trading? Well, obviously, we'll look at trading sterling or cable again, but before we look at any add-in trades here, it's got to break these two this short-term trend line here, which is the neckline of the inverted head and shoulders, and also the descending trend line here of the falling wedge. And that'll be just to add in other markets that are of definite interest, and we posted these on our free channel in Telegram. I'll put a link for that just below in the comments section. We also post them on Instagram, so make sure you do follow us on both. They are both free channels. Now, Euro Pound is one that's of significant interest right now. We'll just come up to the weekly. This is something we've traded from the highs up here. We've now taken first profits at the structure that you could see marked on the previous time frame, which was the 4 hour. We'll be looking at seeing this market at least run down towards the 87, even handle this structure here, the neckline of the double bottom. Now, according to your trade management, obviously each trader is going to manage it individually or according to their rules, and if you're not sure or you don't have any rules, then that's probably the ideal time to get in contact with an education company, either ourselves or there's some other very good education companies out there. You know, do your research and then make a decision to find out who to get in contact with. But ultimately, what can you now look at going forward? Well, as you see here, this was our second trading opportunity that we traded from the highs, very similar to GBP USD. I'll just draw it in for you right now. This was the head and shoulders pattern. Very simple. You can see how the market's moved up, it's pulled back down, created a higher high, created a flat level on the neckline, and then here's the right shoulder. This is an aggressive entry here. Okay, it's an aggressive because you don't know it's going to be a lower high until it actually breaks through the lower low here. Now, there's multiple ways you can look at doing this. Obviously, these details are shared out in our course on how we use it, or to any of our members that are in the Live Traders Club. Now, going forward, what we're looking for is a retracement back into this structure point here around 89.50 to 89.60, and then we'll be looking to add into this position and continue this move south. Be aware that obviously we have Euro refinancing news tomorrow. This is either going to aid or hinder this potential trade, so make sure your risk is completely under control. Don't over leverage something because someone said let's get short here. Make sure you always have your risk under control, because that is the only thing you can control. Another market that's very interesting is pound Swissy. This is something we've traded from the lows. Again, we sent this out to all our members. You can see I'm just moved this because this was a weekly structure point. You can see how the market's tested it multiple times, going back right through 2017, again back end of 2018, and right now through 2019. Now, when we look at this level, what I had moved was this right up into here, which you can see double bottom neckline, but also you've got the structure point here where the market tested. So what we'll be looking for is price to break through here and then trade this as a break and retest, and then looking for the continued movement north on this pair. Obviously, this is all in line with our longer term bias that sterling is massively undervalued due to the pressures of Brexit, which has been weighing on this currency massively. But one of our studies is Commitment to Traders report. We've seen that the commercials were massively taking advantage of the cheap value of sterling. Hence, we were looking for multiple opportunities to buy sterling pairs. Another market mover is pound Kiwi. We've taken advantage of this move. It's very close to our first targets. We will be looking at taking a second position on this, providing we can close out on our initial target one, which will be a retest of around 85.24, 85.35. If the market does come back down into here, we'll be trading it, adding into a position, and then you can see if we just go up the time frames, where our extended targets are at the top of this ascending channel. We will have target 2 in just under the 2 to 1, and that is the exchange rate for 2 Kiwi dollars to 1 pound, British pound, not a 2 to 1 risk reward. I think if you come into around here, it's about a 12 to 1 based on 11.46. So depending on where you put it, if you can see, you can get a 12 to 1 out of that trade if you wish, but be prepared to sit in that trade for a long time. Okay, we're just going to head over to gold as well, because this is something of interest. So we can see gold has been a little bit on the move over the last day or two, but we've got a couple of interesting areas here around 1415, 1420, and more importantly, if we just look at these spike highs around 1430. So what we want to see now is we want to see gold break out of this consolidation and move to the upside. Now if we can break out the consolidation, we could potentially see gold testing the 1448, 1450 barrier yet again. I think a lot here will come down to what happens with the federal funds rate. You can see this will be a buy stop above yesterday's high. First target will be last week's highs effectively, and you can see how the market, looking at the daily chart, has broken out of this range and it's come back to test what was resistance, now support, and we'll be looking for this market to push up into this area. What will be a key driver of this will be federal funds rate. If the rate cut is 25 basis points or maybe even no potential cut, then what we will see is a sell-off in indexes, which in my opinion is probably why the US have now agreed to go over to China on Monday to discuss any potential trade deal. Whether a deal happens or not, what that's done is it's propping the indexes up while we wait to see what happens with the federal funds rate. And they're obviously due to leave on the Wednesday, which will be after no doubt the federal funds rate has announced what they're going to do with interest rates. So very clever tactics, but anyway, we'll just trade what we see. Opinions count for nothing. What do count is what we see on the charts. So stick to your technicals. Like I say, if you do want to follow our free Telegram channel, make sure you click on the link below in the comment section. And if you like the information that's been produced today, please hit like, share and subscribe. By subscribing, it just means that all videos will be sent directly to your inbox, so no need to come and find our channel. Okay traders, have a great day and we'll see you later in the week.